Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's day is November 18, 2014. I'm going to talk to you about iron ore and the Aussie versus US dollar. Iron ore, you say? Yes, iron ore. Why? Because there's an article on Bloomberg today talking about iron ore bear market deepens as China home prices add to concern. And in the article, it says this: iron ore extended a tumble to the lowest level in more than 5 years as declining home prices in China added to concerns that the economic slowdown in the biggest buyer will deepen, exacerbating an oversupply of the iron ore market. Ore with 60% content delivered to China retreated 4.4% to 71.80 a dry ton, the lowest level since June of 2009. The raw material fell into a bear market this year as suppliers boosted their output and spurred a global glut, just as the growth in China was starting to slow down. Prices may drop less than $60 a ton next year, according to Citigroup. And new home prices declined, according to this data this week, spurred speculation that the cooling economy may weaken further, leading to even lower prices in iron ore. Daniel Brazeman from Commerce Bank said the following: any slowdown in the construction sector would probably be a reflection of weaker demand. The global iron ore market is also clearly oversupplied at the moment. HSBC in the last paragraph, the second paragraph to the end, said that they expect that the commodity will average $99 a ton this year and $85 a ton in 2015. So they see a price actually higher than Citigroup, who said in the last paragraph the raw material will dip into the 50s in the third quarter of next year. The Citigroup said in a later November 11th report that cut price forecast. So we have a little bit of a debate, I guess, amongst some analysts. Commerce Bank being a little bit more bearish, HSBC being a little bit more bullish given the current price at 71. But that report came out August 22nd, and since that time, in October 22nd, the orange line here is the price of iron ore, and the price has actually declined from about above the 82, 83 level to 71. This price is actually delayed. It doesn't have the most current price, which the article said was at 71.80. This shows 74.80, so it's moved down $3 additionally to the downside as a result of that home data. So we're seeing a further decline here in the iron ore prices, and things are looking a little bit more bearish. Now, this overlay here, this white line here, represents the Aussie versus US dollar. And now I get the link between the two iron ore prices, Aussie versus US dollar. Why the Australian dollar versus iron ore? Well, Australia supplies a lot of natural resources and is rich in natural resources and sends a lot of those resources off to China. It's no secret that that Australian economy is linked to the Chinese economy, and if they're not going to have as much demand for raw materials in their building of their economy, which is also already in a slowdown mode, but if there's an oversupply and house prices start to come down, that building could be delayed for even further, thus leading to more delayed in the iron ore demand and the supply increasing. And so we could see a slowdown in the Australian economy as a result of that and lead to a lower Aussie versus US dollar in the process. And what have we seen here since, for a lot of this year is that as the price of iron ore has gone down, the price of the Aussie versus US dollar also goes down with it. Now, in the last week or so, we've seen the price of the Aussie correct to the upside while the price of iron ore is going to the downside. So we are getting a little spread here in between the price of the Aussie dollar and the iron ore. Is there an opportunity there? Is there an opportunity to sell the Aussie versus US dollar and have that price come more in line with the declining price of iron ore? And the answer to that for me has traditionally been don't get too caught in the fundamental story, Greg, because a lot of times the fundamental story causes a lot of fear and anxiety and causes you to get stopped out of the price when the Aussie versus US dollar doesn't go down. It goes up for a while or maybe a week, and it squeezes you out of the trade as you lose patience with this link between iron ore prices and the Aussie versus US dollar. So for me, I may have a fundamental story That makes a lot of sense to me. That makes maybe a lot of sense to you as well. But I still want to see a technical story, a story from the charts that is going to tell me that it is okay to sell the Aussie versus US dollar. That is, the bias is to the downside. And as we saw on the chart with the white line in the previous chart, we've seen the Aussie versus US dollar move to the upside here after the move to the downside there. So we're seeing a corrective move to the upside here. And what is the chart telling us? Well, first of all, we have higher lows, and so that's more bullish, and we have higher highs, which is more bullish as well. But there are other things within the chart, within the most recent period here, that may give us some bearish signals. One, we had a higher high here, and in this high that we had here today, came up short against the previous high. It may be a head and shoulders formation here, forming as opposed to an uptrend through here. So that is one bearish possibility. But there are other things within the chart that are a little bit more bullish, especially in the shorter term in today's trading. One, we held against a trend line here. This trend line connected 1, 2, and now 3 different points. So we're above that trend line. That's more bullish. We're also above this trend line right here, and apart from maybe a few little closes below the line right here and a failed attempt through here, for the most part, over the last 6 or 7 or 8 days, the price has been trending nicely against that trend line. So we're above that trend line, and also we're above the 100-hour moving average. And over the last 3 hours, we've seen the price stay above that 100-hour moving average. So all these things are pointing more toward a positive move to the upside for the Aussie versus US dollar. But what if I want to sell this pair? Well, would it make sense to sell the pair right now with the price above the 100 bar, 100 above the trend line, above this trend line? And the answer is no. Now, wait for something to wait for a move to tell you that the technicals are breaking down a little bit. So if the price should move below the 100 and move below this trend line, that would give me 2 of these 3 things. That would tell me that the bias is now turning a little bit more to the downside. So I'd be more interested in selling when the price moves lower than to sell when the price is higher, just because the technicals are telling me that. And I don't really care about the price of iron ore going down, because the market knew that, and the Aussie versus US dollar has gone higher anyway. And so for me and for you, perhaps, follow have a fundamental bias, but make sure, or try to make sure, that the technical picture is also negative. And if that technical picture is negative, you have a way to define your risk and limit your risk against those technicals, which is most important in case the market rebounds back to the upside, and you have an area to get out. But if the technicals and the fundamentals line up, that is, if the price moves below these levels and starts to move below trend line, and the 200 bar moving average starts to catch up with the price of the iron ore moving to the downside, you may have great trade location and be able to tell the fundamental story to support that trade as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.